And welcome to the VSA Capital Tech and Transition Energy Podcast. It's Thursday. It's the 18th of September. And unbelievably, Phil Smith is back.
I have returned, Andrew.
Back in the office. Phil, where you been? You've been away for ages.
I've been up in the Highlands on holiday, Andrew, and thoroughly enjoying Scotland.
Scotland?
Yeah, it was fantastic. Wonderful weather, lovely people, great golf.
Did you play at Mr. Trump's golf course?
Yes. Haven't quite saved up enough money for that one yet, Andrew.
Right, because obviously Mr. Trump is in London doing a lot of pomp and ceremony. But as well as pomp and ceremony, he's getting American firms to potentially invest. I read this morning, $150 billion into UK technology, and various people saying that the UK is going to become the centre of AI. I mean, maybe this is just Donald Trump talking, but it's all pretty exciting stuff, really, isn't it?
Yeah. And actually, do you know what? It's 150 billion sterling, Andrew. Even more. And investments coming in from Nvidia, OpenAI, Microsoft. But I think the first thing to remember is that the US tech corporations are very, very well established here already. Microsoft has a big presence. Google's built its new headquarters up there, King's Cross. And there have been a number of announcements previously, but what's quite interesting about some of these announcements is some of it does seem to be generally new money. I mean, I was read in particular about the announcement that Microsoft is set to invest £22 billion over the next 4 years. And they're saying it's not just AI infrastructure, but this is ongoing operations across the UK, also investing in our research and development and its sales and marketing operations, on top of things like data center infrastructure. And most of these investments do seem to be around AI and data centers. So yeah, generally very, very exciting.
So, putting you on the spot, who are the winners?
In this, well, Microsoft has been a consistent winner, I think, over the years, but it could be Google as well. But in terms of actual UK winners?
Yeah, we want UK winners.
We do want UK winners, Andrew. Something for me to think about for the next podcast, I think.
Yeah, I knew I was putting you on the spot
this is large-scale stuff, Andrew, so it's a bit different, but hopefully a lot of UK value-added jobs will come out of it. But I just noticed you have been talking to, I think, Sound Energy and talking about energy requirements and oil and gas demand. All these data centres, of course,
need a lot of energy.
Need an awful...
And the UK has some of the most expensive energy in the world, thanks to that bloody idiot Ed Miliband.
Right, so you can't mention... So anyway...
just did.
Right, you did. But moving on from...
The most dangerous man in the UK.
Yes, well, let's talk about energy requirements, and Rolls-Royce and SMR, small nuclear
reactors, yeah.
So, which hopefully will be providing some of this energy requirement. Rolls-Royce announced this week that they are now in the process of applying for UK regulatory permission for its technology. But what's also interesting this week, and part of the Trump visit, is that the Atlantic Partnership for Advanced Nuclear Energy has been announced. This is a partnership between the US and the UK on reactor developments, and this whole partnership is intended to fast-track reactor design reviews, meaning that if reactors in the US have passed safety checks in one country, that work can be used to support assessments in the UK. And as we all know, with nuclear projects, they take so long to develop. So this is all based around speeding it up. It's all very exciting, but it's all very tied in for a lot of what we discussed in the energy transition space, the energy demand space, and where all this energy is coming from. I thought it was quite exciting.
Actually, there is some quite exciting stuff going on at the moment, and quite a lot of it's going on in Teesside as well. So we probably need to open the Teesside office, Phil. Because they're talking about the nuclear reactors going there. But the trouble is, they're talking about nuclear reactors going there, and that would those then displace the hydrogen businesses that people like Johnson Matthey were hoping to put there, which is obviously disappointing for a few companies that we know that are very reliant on hydrogen. It seems like you can't have everything, which is really annoying because my wife always wants everything.
Well, afraid I can't provide any further detail on that one, Andrew. A bit of a googly, but yes, there's plenty of news on the sector. So that's quite an exciting time, really.
And going on to energy, we did actually this morning have a little bit of news from our favourite client, where last week we did a bit of a special. But Invinity Energy Systems did announce, didn't they, a little... it was a relatively small order, in truth, for Hungary, a couple of megawatts, on top of a few they'd already announced. But hopefully it's a sign of things to come, and we're sort of waiting for that big announcement that's going to come out and go, whoa, they just landed a monster, and then the stock price will fly. What you got any comments on that?
Well, I think this order in Hungary was for me, it just reflected sort of more geographic expansion for the business. I mean, as recently, you would have covered in a podcast the opportunities that it has now in India as a result of the investment, also a recent relationship in China that's been put in place for manufacturing as well. So it's all about, geographically expanding the technology and clearly the order books, and this is part of the order books. But, Andrew, I have to make a small correction to a research note I issued this morning. We said that the shareholder approval for the fundraise, the general meeting will be held on the 30th of September. In fact,
it's the 29th.
It's the 29th.
I could have told you that. It's Monday.
It is.
Yeah.
So my apologies. There we are. Right. So that was Invinity Energy Systems and their new order.
All right. So obviously, I appreciate you being away. You might not have spotted everything this week, but hopefully you've done your homework.
I have been, yes.
So come on, let's do the Phil Smith. Talk me through the results and what's caught your eye this week.
I will. Craneware. So tickers CRW, market cap £921 million. Shares are up 21% year to date. Very interesting company, this. It's been around for 25 years now. It's been listed, so it's software. And their software is used in 40% of US hospitals. It was originally developed and still very much a core part of the business for ChargeMaster. So as we know, treatments in US hospitals, there's a charge for every treatment that goes through, and there are hundreds and hundreds of charges. And their software is used to measure those charges so that insurance companies can reimburse for treatment. So it's that, but also their software is used for controlling hospital costs and for things like drug costs. Particularly meeting with legislation 340B in the States, which is to provide fairer costs for drugs for the to widen eligibility of healthcare in the US. Anyway, so they reported their results. They announced that their EBITDA profits increased by 12% to $65 million, and their revenue growth of 9% to $205 million. They reduced their debt. They're proposing a final dividend of 18.5p per share versus 16p. So all moving very well for Craneware, because it's had, as we know, various periods where it's not gone so well because of what's been happening in US healthcare, but clearly doing very, very well in saving hospitals costs in the US. Another company that reported this week, one we've talked about before, is Eleco, 124 million market cap. The shares are up by 9% 12 months. Their software is used in the construction industry. It's used for designing buildings, for managing the actual construction projects, materials, and also infrastructure around construction as well. So their revenues are up by 13% to 18.4 million. 81% of this is recurring, something we always look for in software companies. And their overseas revenue grew by 11% to 9.7 million. So again, making good progress, but they did note that they'd seen declines in Germany due to budget constraints in interior manufacturing clients, but strong growth in Europe and Scandinavia. So it just generally seems to be doing very, very well, given that construction, and especially at the moment, can be such a mixed, sort of general environment. And from that revenue rise, their profits were up by 25% to £2 million, and the company has £12 million in cash. So again, seems to be doing very, very well.
Sounds good.
Yeah. One that we don't mention very often, small one, is Kromek. And this ticker is KMK, 39 million market cap, 4-year results. They've been listed for a long time, and they develop, I remember this, it's cadmium telluride detectors that I use for measuring radiation. So this is for chemical, biological, radiological, and nuclear defense. So dirty bombs, things like that, biological weapons, detecting that, but also used in medical scanners. And they reported a revenue increase of 37% to £26.5 million. And of that, advanced imaging was up from 9 million to 20 million pounds. And why? Because they announced a very large strategic deal with Siemens Medical Solutions in the USA. So Siemens Healthineers, big manufacturers of scanners. And so clearly that side of the business is going very, very well. They repaid loan facilities, and cash equivalents at April close were £1.7 million. So showing the value of strategic clients to technology companies, particularly smaller companies.
Yeah, no, I mean, strategics are very important. Obviously, it's a key thing that we do at VSA is bringing in strategic partners. So, yeah. All right, keep on going down that list of yours, Phil.
Well, all right, Andrew, I've been doing my homework, but you're going to spot some. Well, listen, there haven't been many companies announcing. There's a final one for me, and one we have discussed on a number of occasions. Judges Scientific.
Yeah.
The ticker is JDG. Market cap is £415 million. The shares are down 28% year to date, but have over recent years progressed very, very well. This is an acquisitive company in the scientific instrument sector. It consists of 25 businesses acquired since 2005. And what's quite interesting is, firstly, to look at the markets it's in: higher education institutions, scientific research, manufacturers, regulatory authorities. It also has a business called Geotech Coring, which is coring and logging services to government research, but also, for its mining, I think this is resources, isn't it? So coring is used for. So now it's its interims. So its revenues were up by 15% to £70 million. Organic revenue up by 7%, increasing its profits up 17% to £12.6 million. So all good on reading, but they did note that they had some progress. They had a difficult first half in 2024. This was interims to June for 25, but they noted that the half had benefited from the inclusion of the geotech coring business in Japan. So less on the other side of the instrumentation business, and it was under pressure from US federal government research funding cuts. Order intake was, I think, flat year to date, down in the US, but down in the UK, up in Asia. So still very much a mixed picture for Judges Scientific. Alex Hambro is retiring as chairperson. Mike Lavelle, the chief operating officer, has advised the board that he is going to retire. And they formed an executive committee responsible for management of the group. And so clearly the company is undergoing some change. Judges Scientific.
I thought you might have picked up on IP Group's interims on Wednesday.
Yes, I did. I saw that, Andrew, but I did think I might leave that one to you, given your...
That's an unusual thing.
Well,
I think anyone who listens to this fairly regularly knows that I do up for my sins IP Group. Because I've always felt it ought to be a great proxy for technology. And of course, the technology sector is going through the roof, particularly in America, and IP Group just continues to be as dull as ditch water. But I mean, so they come out with their interims, the NAV's down again. But it's the way they write their statement, they claim they are doing well. Well, you're not. Your share price is down the pan. And they say, I got to quote this, it just made me laugh. They say, as one of the world's most experienced university IP investors, IP Group is uniquely positioned to capitalize on fiscal reform and rising demand for high growth innovation while remaining firmly focused on delivering long-term value for our shareholders. Guys, I don't mean to be rude, but that is complete and utter bullshit. You have delivered no long-term value for your shareholders. In fact, the exact opposite. You've lost your shareholders a huge amount of money. And you clearly are not one of the world's most experienced university IP investors because, frankly, you could throw darts at a dartboard and get better investments than you guys are. I mean, I'm sorry to be rude, but it's embarrassing. seriously, someone needs to put these guys out of their misery. Either just liquidate it and give shareholders back their money, or do a merger with it. It's just extraordinary. I'm amazed that the big investors are not shouting at them, and how they can write things like that. Frankly, it is just rubbing your nose in it. Don't write things like that when you're underperforming terribly. It's not clever. That was quite a strong thing, wasn't it, Phil?
It was. You get that one off your
Yeah, I
chest.
got that one off my chest.
But you are a shareholder, and yes, shareholders are entitled to.
Yeah, unfortunately, I'm a relatively small one in comparison to certain people who have got big positions. But yeah, other than that, as you say, I mean, the news out at the moment. Obviously, we've had inflation, which was in line. Bank of England didn't change their rate, so in that respect, that's all very quiet and boring. Most of the sort of what I describe as indicators around the world, there's not been a huge amount of change. I could mention politics, but I've actually stayed off it completely.
That's a very good thing, because we're talking about technology and transitional energy.
Yeah, I know. Actually, I did say that Ed Miliband was the most dangerous person in the UK, which I've now just repeated. So there's a little bit of politics. And look, on that note, it's a short one. We'll keep it short. We'll be back again next week. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.